A wonderful good morning, ladies and gentlemen, and welcome to NAGA and Markets for Breakfast. My name is Alex Duvidari, and today's December the 9th, 2019. We are at the start of a new week. We're getting closer to a lot of things, in fact, this week, and it could be maybe even that one most moving week before the holiday break coming ahead here. So, what are we really looking at here this morning is that, first of all, we saw and let's have a look at it here quickly on the dollar index, because it just gives us the fastest view on the dollar index, meaning the dollar versus a number of other currencies. And you can see that there was quite a substantial rebound in the dollar on Friday. And that was pretty much because of those very, very, very impressive NFP numbers that we got on Friday out of the US. And just to give you a little bit of the data here also, you can see that the NFPs came in with 266,000, way stronger than expected. Now, there's some people that talk it down and say that there might be some seasonal things here and this and that, but at the end of the day, this is a very impressive number, and it blew it out of the water. That's just how it is, because even the other components came in not too bad. So you can see that the average hourly earnings year on year came in lower at 3.1. And I mentioned that to you, that this component could be one of the factors that could put a lid on dollar strength in case the headline came in stronger. And that is what we really want to have a look at, as to, okay, are we likely to continue to see dollar strength or not? And there's a number of other factors at play here. By the way, the employment figure out of Canada came just as shocking as the NFP number out of the US, but it came on the negative side. So we had a minus 71.2K jobs here. And after the Canadian dollar had a good run and was set for more than that, this completely changes things in Canada. And we'll look at that chart also in a moment. So, okay, what we saw was dollar strength based on the NFP result. But it was a Friday, first of all, so it was a little bit of a correction also, given all the weakness that we had seen before in the US dollar in that week. And let's open up a chart here. For example, the euro dollar. I like to look at the euro dollar usually. It gives me also a lot of overview here as how these two big players in the markets are actually doing. And you can see that the euro once again was not able to really get above that 111 level, and we talked about this level, repeatedly, many times. And so now we can see that from a technical, we dropped below the 110.60 area here, also 110.66. That was the former support, and now we saw that we were supported at the 110.40, which is if you look at it, it's something like we've seen earlier in November. Now, from a technical standpoint, we are also above this here. So the 110.70, that's really the next possible test for the euro if we should see a recovery, because I don't think we're just particularly yet completely done with the dollar not getting stronger. First of all, yes, NFP was good, but December typically is a seasonal month that has the impact to hurt the dollar, and there's a number of things happening this week. So first of all, we have the UK general election. Obviously, the market's going crazy about that. Not just the market, but it's a very historical event. And that's why, it's something that we definitely have to consider for markets. Also, there's probably some margin requirement changes for the pound, so make sure that you follow that one. The next things that we have is we have the ECB meeting. So that is another thing. And we have the FOMC on Wednesday out of the US. And we have also the Chinese tariffs deadline, which is by the end of the week. So lots of things that can really make markets dance and jump and go crazy really, and that is why we need to focus on things, on yeah, how to proceed from here. Now, in my opinion, what we see is that the dollar got some boost, and depending on how the situation between China and the U.S. will continue, I think it will be determining most of the dollar development from here, obviously, and the Fed on Wednesday. So, from a tariff perspective, what we see again, and that is on Sunday, meaning yesterday, is that China continues to show signs of recovery. So the imports came in softer at 0.3%, but look, we came all the way from minus 6.4%. And the exports also came in at minus 1.1%, but we came from minus 5.9%. So that is something that is back developing in a positive manner in China. So the Chinese economic power is not hurting too much. Now, you could argue, well, the US isn't either. Look at their labor market. And that's pretty much from the headlines, it's true. So we'll have to, wait and see if they're really going to be able to strike a deal. And everybody's hoping and waiting for them to do just that. And looking at the risk market, what we saw is that those NFP results definitely helped to bring the stock market back. And here we go with the S&P 500. We're very close back to those levels where we dropped from last week. So we could see a reattempt up here to the 3,150 level, and then maybe even see new all-time highs, especially if the Fed continues to be yeah, how should we call it, friendly to the market with its liquidity providing programs or actions. And it looks like it's very likely to continue like this. So now this narrative, or this NFP headline, basically is supportive of the U.S. economy strength. It's not necessarily meaning it's going to push the U.S. dollar higher. Even though we saw the U.S. dollar go higher, it was still within quite a small frame. So I think the focus will be more on risk markets. So it could be that stock markets like S&P 500, like NASDAQ, like Dow Jones could see a lot more of a boost. And obviously gold, on the contrary, on the other hand, took a dive, yes, on that risk on movement, and is now trying to not fall below that, presently at 1460. But anything about between the 1450 to 1460 would be still okay, would be around the support levels we've been at before. And technically, this is still a higher low than what we had seen here. So it's not the end of the world, even though it's not a positive development. But we'll have to see like what the Fed is going to do, and the ECB, and that trade war narrative, obviously, as well, is very important. Now, let's talk about the Canadian dollar for a moment, because that one had, let's just say, other plans. Chances were looking, we had the Bank of Canada before, and the Bank of Canada was showing that okay, so Polosh, the governor of the Bank of Canada, he was saying that he sees that the economy was in a good place and there was no reason to consider any further cuts or anything like that. But that really, I mean, extremely bad number. They lost 71.2 thousand jobs. That is the biggest monthly fall in a full decade in Canada. And and it's, especially if you look at it, it's the full-time employment that changed around almost 33,000 jobs were lost, and part-time was around 38. So, and they both had positive as an estimate. So, and the unemployment went up to 5.9%. So none of that is good, and that could really come to haunt the Canadian dollar further this week. Something that is still supportive of the Canadian dollar is the oil price, and I'll get to that in a moment. So also here, technically spoken, if we remain below the 132.70 level, then chances are that we will go back into the range, maybe retest the 132 if the dollar gives up some of its strength, which is again possible given that we're likely to hear more dovish talk from the Fed itself. So that would be week versus week. So that's why it might turn out just for the Canadian dollar to get away with this with a blue eye and not really with a black eye, I think is the English word. So not really be hammered down as much as it should, because remember, it's the weakest job market in Canada within a full decade, and it looks like even the governor of the Bank of Canada is taking some consequences out of this, and he has announced to step down in June 2020, so when his mandate expires. So he's not looking to do it one more time, and really that drop in the jobs market was very, very dramatic, too big to ignore really, and that could bring in some new blood, some new expectations, some new policy types. Let's see, we'll find out. And so that could bring even more trading opportunities to the Canadian dollars down the road, so watch for that. And then obviously the very biggest focus of the week is what is going to happen in the UK. So we can see that the pound continues to trade up. We saw now another high at 131.70, and we could be in for the 132 level now, because we see that the polls continue to show the Tories that are maintaining their lead over Labour, and it's a comfortable lead, is that what we're saying, and we're now getting closer. It's the last couple days now. Today's the 9th, and the election is on the 12th, so that will be very, very dramatic, obviously. And there is a website here by The Guardian, and you can find out like who is where. You can see like here, this is the YouGov, the Delta poll, like all these different, and you can see here Conservatives blue, Labour red, Liberal Democrats orange, the Green Party, the Brexit Party, and others. And well, you can see that there is a clear lead here, and that it wasn't always like that. Right? You can see that very, very, very clearly. So that will be very interesting to see how this one will eventually plan out. But pay attention to this. That will be the most significant number one thing that will take all the market's attention while it happens. So that's definitely something to keep on top. And from a technical standpoint, the pound has a lot of potential to the upside, given its decade low levels where it's at. And if that kind chart would load for me, here it is. You can see that really if we take out that 133, 134 level, then it gets interesting. We could see all the way pushback towards that 145 level, not completely like 133, 143, which we had seen in the beginning of 2018. So that is something that is within reach now, but obviously we need to break that 134, 135 first, and there's still quite a stretch from where we are now. But the pound remains to be a buy the dip story, as you can see, like dips buying, dips buying, dips buying, big buying. Here dip buying and another. So any daily candles on a negative seem to be quite interesting to buy into them, as we look the underlying trend is clearly to the upside. Then again, we talked about China already, that we see positive development here over the weekend. We talked about, we didn't talk about that tariff thing yet. So we don't know exactly what's going to happen here. So are they going to agree? Are we going to see the tariffs? So we really don't know. It's so difficult to decipher how it's gonna plan out, and that is really just the summary of it. We will have to wait and see and catch the news as to what's going to happen, and we only have these few days left. So that's why I'm saying this week is so supercharged. We have central banks, we have an election, we have that dreaded deadline also that will expire by the end of the week with or without our consent. So all these things are very, very, very dramatic, especially all happening at once and in that more or less last week of the year before things start to thin out for Christmas holiday. So that could really impact. And right now, what we see is risk markets are on the rise. So we see stock markets go up, we see gold go down, we see Swissy go down, we see yen go down. Everything that has a safe haven tag on it is actually losing in anticipation of a risk-filled week. And right now, from what we see, the fundamentals versus the technicals, this risk on does seem like it has a chance to persist throughout the week. Even though, I mean, we talked about it too much in the bigger picture, like how much there is signs of weaknesses in many economies of the world, but that's not going to be let's just say the focus of the markets this week from my point of view. And here's just another chart to show you, like, for example, all these pink countries have proceeded with a policy rate cut this year. So you can see there's really a lot of banks that are cutting rates here, and that is another sign of not a positive trend here. And that is really also a very interesting chart here that we're seeing, is that here, good morning from the ECB. The key interest rate in Germany should be 4.6%, at least to the Taylor rule. I can explain what the Taylor rule is some other day, but it considers like each country's separate and individual economic state, and that would need Germany to have at least 4.6% of an interest rate, while it's having zero. Even Italy should have a 0.7%. So let's see if this is going to impact somehow into the ECB meeting. It's Christine Lagarde's first meeting, and that is why it's so important, because now it's getting real for the euro. And Holger Chepitz is writing it here quite nicely. After the honeymoon is over, the new ECB boss Lagarde holds her first policy meeting on Thursday. Markets are keen to assess her take on outlook for monetary policy and get sense of her communication style. The main question: how strong is Lagarde's commitment to September easing package? Right. I mean, that will be quite interesting. And you can see there's very, 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 very few hawks in the ECB. There's some in the middle here, and there's a lot of doves here. And we've seen that recently they have been fighting a lot with them. And that will be very interesting to see. And Christine Lagarde somewhere in the middle centrist here, in order to see where this will be going. But that will also, in my opinion, have a big impact on the European currency to look at. And we will explain more and more as the week transpires what to expect here. Looking at another market that really did big movement was oil. And for a long time, it wasn't so clear what's going to happen here. And here you can see that's why oil, I mean, I told you, oil can be brutally volatile. And it showed its brutality one more time. And it's trading quite high now, almost close to the 59, which it allowed it to, break out of these deadlock around the 57 and 58 level. And now it's really trading for the highest in weeks, and could really persist further. Now, what we saw is that we had a leak from the OPEC Plus, which then turned out to be true, is that the OPEC Plus members agreed to maintain the existing production cuts, but in addition to that, Saudi Arabia committed to cut an additional 500,000 barrels a day. And there was a pledge by other OPEC Plus members to reduce the production by 400,000 barrels together, aggregated. So that means that we are looking towards a lot less oil production. That has propped up the price very clearly. That's how simple it is. You artificially restrict the supply. The demand stays the same as it was, but just by reducing the amount of available product, you are basically pushing its price higher. And that worked, and that may actually just be the beginning of a more rising oil price, which, by the way, is not what central banks like, because that would bring inflation in play. And the central banks are in no shape to act versus inflation because the economies are doing so bad. So that could become an interesting hook, an interesting development into the year 2020, because I don't think that we are out of the woods on a global economy scale at all. And again, that phase one deal is not fixing anything. But what do we do if energy costs explode, economies are not able to catch up with with recoveries, and that would be the worst of both worlds, and that could really bring in some issues to risk markets. But that's now a little bit further ahead. But just, we got to keep our strategic outlook here. So for today, what we want to see is that, okay, what's going to happen further with the trade war rhetoric? What's going to happen here? Right now, the dollar has a good chance of further continuation to the upside, especially versus like yen, Swiss francs, euro. The Canadian dollar seems to, have issues. With China coming around, better numbers, we probably have good chances to see a continuation in the Kiwi and the Aussie. Those could also look very interesting versus an already weakened Canadian dollar. The pound looks to be set to explode further on the Tories election, that is what. And the risk markets continue to have reason to go up on their expectation of that tariff deadline not to be missed, and with these positive developments in economic numbers, whether it's the NFP in the US or the imports and exports out of China. So that is where we are right now. In the land of crypto, as I like to say, we can see that we are still nowhere really much. So we remain in the same trading range. We can see that over the weekend there was a little bit of an attempt to the upside. So we saw a momentary 7.6 thousand. Right now we're close to 7.5 thousand. But in the big picture, nothing much is happening other than that we see that a clear bottom seems to be forming here around the around the 7K actually. Plus minus 500, and with a slight tendency to the upside is what we can see here, which puts crypto back on the map of being neutral to possibly now in an accumulation phase, which could lead to another break to the upside. So, but that would be very premature to just expect that for the lack of falling further, right? So what we now seen is that we seem to have averted for now further downside. But again, I mean, that development here, that the blockchain trade, as I call it, really resulted in further and more lows is alarming at best, if you ask me. And I continue to see this year, ever since we reached the high in July, also not a very good development. But again, I mean, what we've seen for sure is that Bitcoin has come back from the dead repeatedly, and we can see there is the global push more towards cryptocurrencies. But I think what we will see is more of government control cryptocurrency. So that would be an interesting development for sure. And for now, the price of Bitcoin seems to be fairly neutral, with not an immediate downside pressure, but also there's a lack of driving factors to the upside either. So that's my overview on this Monday morning. As always, thank you very much for listening in. I wish you a great, successful trading week, and we'll be back here tomorrow morning. Bye-bye.